Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
Tuesday night, that means Battle Royal Stocks Fight right here on CNBC Africa. Welcome to Share Shootout. I'm Bruce Whitfield. Tonight, we've got defending champion Mark Ingham from Ingham Analytics, who won last week very convincingly. And we have a new contender who's here to wrestle the coveted title, Lavan Gopaul from 28E Capital. Our guests have each pre-picked 3 shares. Neither of them knows what the other holds, but at some point during proceedings, they have to accept at least one of their competitors' stocks. The longer they leave it, the more likely they are to have to accept something they don't like. Each has got 30 seconds to argue their stock pick. We then interrogate their choice, humiliate them, and then it either gets shot down or accepted. The least convincing stock picker is banished. Where should we banish you to? You have to go and serve on the board of the SABC for 6 months. That'll be a good punishment. The winner, however, gets a far better prize. A 2-gig USB drive that the producers share. They get to use it for a week. That's how then we get it back. That's how Share Shootout has won, and arguably the most vicious stock-picking show on TV. Let's the Share Shootout begin. Lavan Gopaul, you haven't played this game before, so you're going to have to be schooled very quickly on it, because Mark Ingham is a veteran, and just to show you how good he is and how scared you need to be, 30 seconds, Mark Ingham, on a very interesting little company called Metair Investments. Start now.
Right. A few years ago, little weak in the automotive sector, one customer, strategy to diversify, now serves 7 customers in automotive OEM and in the aftermarket. Some very smart battery technology, stop-start, good growth. And I think some exciting times ahead, and cheap too. Okay,
so here's Metair Investments. Within the 30 seconds, he gets extra time now. Within the 30 seconds, you completed that very nicely. The issue around the car that they've just developed, they developed a 600,000 Rand battery-operated car, which they say they're not going to now turn commercial. Isn't this a missed opportunity for them, or were they just trying to prove a point that lead batteries are better than lithium-ion?
Quite. They're going to showcase a technology that they have in many cases pioneered, and which is finding great application with OEMs, and they're a tier 1 automotive supplier. So this just goes to show that homegrown technology can in fact find application with the strictest requirements of OEMs.
Okay, well, Metair Investments, it's a tidy little business, 5.5 billion Rand. It's on a multiple of 11.5 times. You might do well to accept this one rather than shoot it down. Is it one you like?
There's parts of it that I like. In general, I think the capital is not always well allocated. I think there's far too much allocation to high-risk investments. Bear in mind, for such a small capitalized business to be involved in such specialized investments that may or may not have winning bets, I think is too risky. Shareholders can do better.
He's very dull, this man, isn't he? Okay, you've lost, by the way. It's my forecast. I'm very good at forecasting. I look at this as a wonderful opportunity. Sure, it's high risk, but you're not going to take your 100,000 Rand and put it all into Metair Investments.
It's not high risk.
You're going to put in 10,000.
And those investments are already paying off, in fact, quite handsomely. There's a back-to-back arrangement with these OEMs. So it's not as high risk as it appears at face value. I think you've got a point. But I think if you dig deeper, you'll find that not only are they getting improving returns, but they've invested wisely. And I think the fact that they're exporting significantly now, not only in Africa, but to Europe, they've also got a plant in Central Europe, Romania. I think this is one that is another South African success story.
Okay, but do we not face some kind of regulatory burden in the future? There's a recent report out saying that one of the reasons why we're so aggressive is because of all the lead in the atmosphere. Lead is becoming the next tobacco almost. We've removed it from petrol. Are we not at risk now of these big companies sort of saying perhaps this lead battery system has got to be updated, upgraded, it's not a very green technology?
I couldn't agree with you more, and this is where the deep cycle know-how comes in. Sealed batteries, they're still a fundamentally important part of any automobile and will be for many years to come.
Okay, so it's one that you can see the benefit of. You don't like the risk, you don't like the capital allocation, and it's one that I'm assuming you're going to shoot down, Lavan.
I'm going to shoot it down.
You're a very brave guy because you haven't seen the rest of his picks. It's always very courageous to shoot down the first one. As a new player, he's playing dirty, Mark Ingham. Let that be a warning to you. You, Lavan Gopaul, are going into the property sector. Why Redefine?
Redefine is a business with a good property mix. It's got commercial, industrial property, a fairly decent yield, consistently growing. They've got decent properties not only in South Africa but exposure to the UK market, so there's some currency income. They've got long leases and escalation thrown on. Very good exposure to now Fountainhead, almost 40%, and regardless of the outcome, they're going to be winners.
Okay, there we go. Redefine Properties. Property has been the dark horse of the last 10 years in terms of investors seeking yield, and every year you have a couple of brave pundits who say it's the end of the cycle for property, and property has surprised us. Does property continue to surprise, Mark?
I think South African-based property groups certainly have been very prudent in their approach. You see it with the low rates of vacancies and so forth. I think the yields are attractive for the right investor. This is not a bad place to be. I've looked at it, and I would concur that this is a stock that I think any discerning investor probably would want to be exposed to.
Okay, probably be exposed to, but I look at the UK property sector, and I haven't been to inner London for a year or two now, but there was a time where I got a very clear sense of tumbleweed through Covent Garden, and I was concerned about the prospects for Capital and Counties or Capital Shopping Centres, the two elements of Liberty International, one of them now given themselves a silly name now that no one can remember. Exposure to the UK property market, nice currency bet, but in terms of the fundamentals of the UK property sector?
So I think they're sufficiently geared in the UK. You've got the pound income, which is a big plus. They have got fairly decent occupancy for the UK property. Whilst that is not the largest slice of their income, it's in the order of about 20%, maybe slightly more, that comes from the UK. The bulk of it is in South Africa, and again, acceptable gearing at 40-year low levels on interest rates. Most of the properties that they have are established, so not exposed to the residential market.
What happens, though, when interest rates start rising, which they must? Perhaps not this year, perhaps not in the first half of next year, but interest rates must start going up at some point.
Certainly that's the bane for any property holder. There's going to be a problem in terms of maintaining that income flow. The yield is important currently.
The yield's huge.
And I think that there'll be decent protection. Bear in mind, these are sophisticated property players. They've been in the market. Mark Werner and so on have been around for almost 40 years. I think that they'll be able to put in some currency hedges, protect themselves from interest rate spikes, and whilst they're not so geared that it's going to affect their bond repayment, I think there's a question of whether the occupancy levels will continue. I'm convinced they'll be able to manage the situation.
Okay, so a property company exposed to the South African property sector, exposed to the UK under constant threat of recession, South Africa growing at a very slow rate. Is it one that you would buy, or do you shoot it down, Mark?
If I was 65 or 70 years of age, of course.
So how much of it have you got?
Well, clearly you can see my age.
Okay, I mean, you're being slightly facetious there, but it's an income play.
Yes, exactly.
And
so
every portfolio can do with a bit of an income play. It's not just for pensioners. But is it one that you're prepared to accept, or is it one that you say it's a little bit too low risk? There isn't enough excitement in this for you for a program like Share Shootout, and you are going to shoot it down.
Well, I think if excitement is your game, this is not the place to be.
Okay, but what? Okay, I want you to make a call now. Do you accept it?
However, having said that, I'm going to accept it.
You are going to accept it. Oh, he's so contrarian. You never quite know which way the Ingham breeze is going to blow. All right, Mark Ingham. Your next one is a little bit more adventurous than your first. Quite courageous. Blow us away with AECI.
Another one of those companies that was struggling a few years back, reinvented itself, significant capital investment program, specialty chemicals and explosives. Specialty chemicals the largest, good margins, operations not in South Africa, throughout Africa, Latin America, East Asia, very good sort of diversification, and we're going to see the return on those investments increasingly coming through, and a very strong overseas income.
Okay, AECI, explosives and chemicals. Do you like it, Lavan, or do you not?
I think it's got explosive potential for investors. I like the fact that it's also a big property holder over the years, has been disposing of some of its property. But as you see a construction boom and a mining boom that will continue in Africa, at least for the next 20 years, I think AECI is well positioned to be able to feed into that industry.
How much competition has it got, Mark?
Well, there are a number of chemical players around the world, but in their specific areas, they're typically one of 2 or 3 or 4 major players, and they're well spread. There's a range of industries that you use chemicals in, including agriculture, food and beverage. So you're quite well spread in the sense that you've got some nice growth kickers, but you've also got some fairly stable areas too.
Okay, some fairly stable areas, some nice growth businesses. This is one that you're going to accept, I suspect.
Oh, it's a crack over stock. I've got to accept it.
Okay,
yes.
But you're taking it, even though it's trading on a multiple of 18 times. It's pretty pricey. It's higher than the market average. The growth story, however, is one that is compelling. What sort of return might you expect out of an AECI over 5 years?
I think over 5 years you probably see that PE start to look a little sharper, maybe find its way closer to 10. And I'm also hoping to see decent cash flows into the business. So I think for a shrewd investor, over 5 years you could probably get 2.5 times your capital.
2.5 times? Would you be as conservative as that, Mark Ingham?
Possibly even more, but there's an accounting technicality in the BEE, which is not backed out of headline earnings, which artificially inflates the PE.
Okay.
So the actual PE is a hell of a lot cheaper. It's closer to 10, which means that if you look at it on a cash earnings basis, it's even better value for money. And I think you could get compound growth of a good 20% over the next 3 years.
Okay, very nice
Earnings.
one. Absolutely. Nice earnings growth there, decent dividend flows coming out of it as well. It's on an historical dividend yield of 2.5% or thereabouts. It's a decent one, and you're accepting it, Lavan. Good. So AECI gets the big thumbs up. Tell me then, Lavan, why you are choosing Pan-African Resources. The guys who take mules up into the mountains at Barberton with their old-fashioned panning equipment and look for gold that might be left behind.
All that glitters is gold. They produce in the order of about 100,000 ounces. They've recently bedded down a transaction with Harmony. They've taken on Evander, so you're likely to see even higher production. They've been very good managers through a very dark period in South African mining. Through 2012, they remained largely unscathed. They're very highly geared to the gold price, and I'm of the view that the gold price can continue to climb over the next few quarters. And I think that they're also able to show us a decent return. Compared to their peers, you're seeing Pan-African trading at a modest PE.
I'm going to stop you there, but if there was one gold company in South Africa that I might consider putting a little bit of money on, it would have to be this one. What about you, Mark?
A wise old trader said to me many years ago, you trade gold shares, you don't invest in gold shares. And this is another classic case in point. So a fool and his money are easily parted, and just as fool's gold can bring people running into these type of things, I would be staying well away.
Now, what are you saying about Lavan?
I'm sure he has reasons for his choice.
Well, let me say,
are you a fool, Lavan?
no, this is not a widows and orphans stock. This is for playboys and showgirls. So I think that
I'm not sure which you are.
I think you want a little bit of this in your portfolio. Yes, it's a trading stock, but your view on gold is important when you get involved in Pan-African. And if you believe that gold's probably heading towards 1,700 over the next 2 or 3 quarters, I think you'd want a slice of this stock.
Okay, but if I was going to trade a gold share, would I be trading Pan-African?
I probably wouldn't be trading
Gold shares at all?
Pan-African, probably one of the Canadian mining juniors.
Okay.
But certainly nothing locally.
Okay, nothing locally. I'm afraid you're probably being shot down. Are you shooting him down?
Yes.
He's shot down in flames. So what you've done so far is that you've taken a look at his first pick this evening of Redefine Properties. You've accepted Redefine Properties, if memory serves. It was a good, safe bet because Pan-African is not one that Mark Ingham can with any clear conscience accept, because he says a fool and his money are soon parted. Fool's gold and real gold kind of are tantamount to the same thing. So Lavan Gopaul has been shot down on Pan-African Resources, despite it being a very exciting, quite emotive story. story dating back to 1865. But when it comes to making investments, we don't invest on emotion, now do we? So Lavan, I'm afraid you shot down on that one. No less brutal, however, is Lavan himself, who takes one look at Mark Ingham from Ingham Analytics' pick of Metair Investments Limited, with a good news story behind it in terms of its ability to test its technology and to prove that electric cars do not have to cost the earth. It has got electricity, battery technology and other automotive parts, as Mark Ingham explained. Market cap of 5.5 billion rand, some exciting stuff. But Lavan Gopaul says simply too high risk for his blood. But he chose Pan-African Resources, but that's another issue. This is not about hypocrisy when it comes to share picking at all. But Metair Investments got shot down. He does, however, like Mark Ingham's story for AECI, and gives it a great big throbbing thumbs up here on Share Shootout. So we'll be back in just a moment where we get the rest of the picks, and we'll accept some, we'll shoot down the rest when we return.